Can this gold trading strategy make us profitable? Is it any good? Or is it just another overhyped strategy that shows promising results in the backtest, but when it comes to trading on the live market, it's absolute garbage? So as usual, let's get down to an example. We have got on the left hand side a 1 hour chart, and on the right hand side we have got a 5-minute chart. We are using a simple moving average, which is your 20, and we're using a simple moving average on the 5-minute as well. This strategy requires you to identify the low of the current 1 hour candle and the close of the 1 hour candle. So this is a example for a long, and then we'll get into the backtest in a moment. So you mark it out like this. You can get a Fibonacci tool and you can untick everything except the 1 and the 0, and you can have the background shaded like this, and it'll give you something like this. So it just saves you time from marking out with the trend lines. And once I've done that, what you will notice is it will automatically appear on the 5-minute. So I have selected this because this is a good example to display the strategy, and what we're looking for is a continuation of the 1 hour candle in the direction of the previous candle. So if this is the current candle that we're looking at say at the point of this is 1805, let's say, this candle closed bullish. You can see we are, in terms of our bias, we're going to be looking for longs. Simple as that. And because we are above the 20 hourly moving average, we are bullish. If the 1 hour 20 moving average and the 5-minute 20 moving average are not in sync, then we won't take that trade. So let's say, for example, we are above the moving average here, but the 5-minute we're below. That's a no trade. So we have to be in sync with both time frames. Okay, so what is our entry model? Very simply, we are looking for either price to come back into the moving average, which is here, as close as possible, and then we enter the trade, or if we're already seeing bullish momentum in that direction, we can take the trade. So in this scenario, where would we place the stop loss? The stop loss would usually go under the 1 hour wick, or the 1 hour low in this case, because we're going long. The other videos that I've seen, people have placed the stop loss under the moving average, but oftentimes price can come back into the moving average, tag you out, and then continue up. So safer bet would be below the low of the previous hourly candle, because we don't really want that to be violated. So let's take the trade, and we are aiming for a 2-to-1 like this, and you might find that price does come back into the moving average right there. And what I personally found is that if I did that in the test, oftentimes trades are missed, but we'll do it anyway just to show you what it looks like. And we're just going for a 2-to-1, and as I mentioned, this is just an example, cherry picked example for you guys to see. And you can see we went into profit, and price never actually came back and tagged us in. That's because we ranged for a little bit, and then of course the moving average is following closely to price, you can see. But we are in the trade at the moment, and what we see is, you can see that had I placed a stop loss at the moving average here, we would have been tagged out, but we are of course still good. And let's see, yep, so it's profitable. This was just a live example. You would do exactly the same for a short position, but the opposite way. So let's get down to the back test and let's see if it's actually profitable or not. So you've seen this video, you're excited, you're thinking it's going to be profitable because somebody mentioned that this can make you $350 a day or $1,000 a day. Of course, that depends on your account size, of course. But you're excited, you want to get going. I'm going to test this as though you have just received the best revelation in the trading world and you're getting ready to get started. And if in the next few trades this performs badly, then you might get people commenting, well, you didn't give it enough chance. How can you not do 50 trades or 100 trades? In reality, as traders, if the first few trades we take from this strategy doesn't work out, our psychology gets affected quite a fair bit. So I'm gonna trade like that. Let's go for it. Random bar, you can see. Okay, so what have we got here? At this moment, we have got the trade that is showing at the end of the day. A new candle has obviously appeared. I don't really want to be trading the Asia session, not when it's just open. So we'll go with this one. This is August 2018 at 4 p.m. on gold. And at this moment in time, what we got? We have got a situation where we have got a bearish candle on a 20 hourly moving average on the bullish side. So we don't really want to take this trade. I want to see a candle on the bullish side. So let's just skip through this and let's see what happens. I'm going to wait for the next candle. If this turns bullish, then I would be looking for longs here. But if this stays bearish, then I'm going to go for a no trade, because remember, we don't want to be trading against the moving average. Okay, so now we have got a bearish candle, but we are in a no trade zone. I'm just going to wait for the next hourly candle, which is going to be around 6 p.m. Let's wait for that. And it has obviously opened up. We've got a situation where price is, of course, wicked to the downside. The body is quite small, but we've got somewhat of bullish intention, but we've got sellers coming in. So if we was to look at this and be like, well, I want to take this trade because I've been waiting for the last couple of hours, then it would be something like this. And then what we're looking for is some bullish momentum to go in that side, and then we place our stop loss there. Let's see what happens. Can we get any bullish momentum? No, we didn't get that. Can we still get it? Okay, price is trying to come. Okay, we have got somewhat of a bullish momentum here, but we want to see a close above the simple moving average. Have we got that? Yes, we have got that now. So now that we have got it, let's place our trade. Remember, stop loss is going to go below that hourly low that had given us the bias in the first place. And then we're just going to go for a 2-1. There you go. Let's see what happens. Either we make profit or we get stopped out. And of course, we got stopped out. Let's move on to the next trade and let's see what happens. So that is 1R loss. Let's clear that for a moment and look for another trade. I'm gonna go for here because we're gonna wait until that's 8 p.m. and okay, we've got bullish candle here, not the best, of course. And we're going to mark out the low and the close. And we have got wick rejection with a candle close above with a wick rejection. This is potentially signaling to the downside, but because we close above the moving average and we can place our stop loss below here. Okay, and then we're going to go for a 2-1. And let's see what happens. Can we make a profit from this? Yes, we can. So whatever we of course lost here, we've just gained it back, and now we are heading into potentially the Asia session. So let's have a look whether it is profitable in the Asia session or not. So around, I don't really want to be trading at 11 when the market opens UK time. I want to be looking at just an hour after, so let's say midnight, which will be around here. Let's get rid of that for a second and let price continue. There you go. Okay, we are in midnight. Now we have got price is bearish above the moving average. Below here is a no trade, but what we'll do is wait for the next hourly candle, which is going to be about there, and we have got bullish intention. Okay, so let's see what happens now. We're going to be taking the low to the close, and you can clearly see we have hit that moving average there, and we got bullish momentum on the 5-minute. So here's another trade. We take that, a stop loss below, and we aim for a 2-to-1 again. Let's see what happens. Okay, you can see in this part we got to about 1R, and then of course price broke down to the downside and we got stopped out. So at the moment we lost one, won two, lost one. We're at break even at the moment, and that is the Asia session. Let's see if we can get another trade, say around 3. If this becomes bullish, then we would be interested. If not, we're not interested. Nope, we're not interested. This has become bearish. It's going against the simple moving average. We will look at the next hourly candle, which is about there. Let's wait for price to reach that point. Okay, price didn't recover and it didn't give us a bullish signal. We're bearish, so we wait for the next hourly candle. Again, this is in Asia, so it's 5 a.m. now, guys. So let's see. Okay, all right. So now we have got a situation where price has tagged that moving average, and we have got your bullish candle there. Got a bullish candle, and what do we see? Price breaking above. Can we get one more candle? Yes, we can. And stop loss below there. And let's go for another 2-to-1. Okay. Can we get a trade going up? Almost got stopped out. Still bullish here. And there you have it. We have got the win there. Okay, so we are up 2R at the moment. Okay, so far it's been quite simple, I have to admit, because we've got this moving average. We are constantly in the direction of the trend, and all we're looking for is the candle to support that trend direction. So in that sense, I'm not feeling any certain types of uncertainty based on the fact that I got stopped out. I got stopped out here. At this point, my bias didn't change. The reason it didn't change is because we're above the hourly moving average. So I was just looking for another long. Of course, once I got stopped out here at 1:55 a.m., it took a good, 2.5 hour plus to get to the next trade, which isn't bad. Okay, now that we are in the potentially coming up to London session, let's see if this performs any better in the London session. So I'm going to wait for the next candle to open up, because obviously this one's bearish. Okay, we're bearish at the moment here, so I'm not going to take the trade until this candle closes bullish, because I want to go in the direction. Okay, so that means that I'll have to wait for the 10 a.m. candle. It doesn't matter if I've of course missed it. It is what it is. We move on, and you can see clearly we are bullish here. Okay, so let's mark out the low to the high, and what's going on here? We have got wick rejection. We got wick rejection here. If we can get somewhere closer here or a bullish candle in that direction, then I will look to take the trade on the 5-minute. At the moment, nothing. Still nothing. Okay, market's a bit slow. Okay, there. I would have entered on that trade there. Just skip this back 1 second. Right there, I would have entered. Got a bullish candle there on the 5-minute. Stop loss goes where? Below the previous hourly candle, because we don't expect price to come back down. And then we will take a 2-to-1 on gold. Let's see what happens. By the way, this is 2018, so those of you are thinking, well, it's a bullish market now because gold is of course trending all-time highs, so that's why it's easy. Well, we're in 2018, so let's see what happens. Can we get this as a nope? And you can see price has gone below here, so we are still above here, but there's a likelihood that we could get stopped out, and we have got stopped out there. Okay, so we're up 1 hour still. Let's move on to the next trade. And what I'm looking at is, can this be a bullish candle here? At the moment, we have got a strong bullish momentum. Okay, because of the wick. And you can see that we have had bullish momentum with the close there. Okay, and we have broken above, but we have had a wick to the downside, so let's just wait for one more candle. Yes, we have got it. Let's enter the trade. Stop loss below, and let's go for a 2-to-1. There you have it. Now some of you guys that are watching this are probably thinking, well, you know, why didn't you just enter here? Because it was a wick. We didn't really like that. But some of you might think, well, we closed above the moving average, so we're going to take that trade. It's up to you. So let's see what happens. You can see right now we have gone into New York session, and usually, you know, you get some kind of news, so there could be a stop out. We almost got stopped out there. And let's see. Yep, we have got stopped out. Okay, brilliant. Now that we've been stopped out, we're back to break even, obviously. And we can look to take some short positions based on this huge bearish candle. So as of now, all this trade that we've got and done, we're at break even. And as a trader, do you really want to do that? Maybe if you guys took this strategy and just did a backtest on one trade per day, then that could more or less be enough. So it could be that you trade one day, you made profit, shut off, move on, go to the next day. We could potentially do that. Let me just try to do the bearish side and see if it's any more better. So at the moment, longs have just given us break even. Let's get rid of this drawing, and let's just wait for the next hourly candle, which is about there. And you can see that price is bearish. Okay, and we got the top where the price started from, and we got the close on the bearish candle. So we're just doing the opposite of what we did on the long side. And what we're doing is waiting for price to reject from this area with a bearish candle. Okay, so some might say that's more than enough. Let's take it. Stop loss at the start of that bearish candle, and we're going to go for a 2-to-1. Okay, let's see what happens. Okay, price is falling nicely towards our target area, you can see. And you know, you're looking at this and you're thinking, well, why didn't I place my stop loss just above there? I would have hit my target easily. Well, you've seen from the long back test, that price does sometimes come into that moving average and takes you out. So a safer bet would be somewhere along that way. But there you go. We've of course hit target. And I do believe that one of the reasons why it's hit target very easily is based on this candle that had a strong sell-off, which made us go very nicely in the direction that we are of course biased towards, which was on the bearish side. So in that sense, we got a 2-to-1. Okay, so that's how we would do longs and shorts. What I want like to test out now is per day basis. So can we select a day, and let's start off with say 10 a.m. as our preferred time. Okay, and let's just go back, say let's go to Tuesday the 3rd. Okay, to the 3rd. Okay, and we're going to try to do a few trades like that, where we do one trade and move on to the next day, one trade, move on to the next trade, and let's see if it makes any difference to our trading. So we are of course bearish at the moment, but we've got bullish candles. We need a bearish candle to confirm our bias. Let's see if we can get that. Okay, we have got one, but of course it's not closed yet. Let's wait for, there you have it. So we have got that bearish candle there. The start of that bearish candle to the close. Price is coming into this shaded area. Can we get a bearish candle? Yes, we can get bearish candle, but it is a wick. Can we get something? No, we haven't. Can we get a bearish? Yep, we've got that. So I will take a short position. Take that position, stop loss above the start of that candle, and then we're going to go for a 2-hour trade. Set and forget. Let's see what happens. And you can see we got stopped out, and then finally price of course fell in that direction before we got stopped out. So we got stopped out about there. What did that trade go down to? It went down to about 1R. Okay, 1R. All right, so we got stopped out here. Let's move on and let's see if we can get one more trade in, because we've got a strong bullish candle there. Can that next candle give us a trade? Okay, and you can see that this candle has a strong bearish candle. Now if you was to take that trade here, because the momentum is very strong in that direction, that would mean what? It would mean that you'd have to mark out this high, well, the starting of that bearish candle to the close, which is about there, and your stop loss would have be huge, something like this. So personally myself, I wouldn't take it. Just take the L and move on to the next day. But for the backtest purposes of this video, let's see what happens, whether you become successful or not. You can see that clearly price moving sideways, and you're about to get stopped out because you know you've seen this bearish candle and you wanted to go in that direction, but price of course had something else to do. Now in Asia session ranging, and you can see price is going in that direction. So let's go back for a second. From this you learn, you've got taken the L for that day, allow it, move on, wait till the next day, and let's see the next day what it looks like. So the next day we have got a bullish candle right there. We're going to mark out the start of that bullish candle to the close. And what are we looking for? Can price come back into this region? Okay, nothing as of yet. Okay, price is trending towards the upside. Do you want to see price come back here, or do you want to take that trade? If you was to take that trade, it would look something like this. Okay, and you can see your 2-to-1 is huge, or you wait for price to come back closer to the moving average. You see there, it has. So at this moment in time, if you enter this trade, you will be in drawdown. But now let's see if price trades up. Okay, still nothing. It's going sideways. You can see we've got quite a big sell-off. So this most likely was a trap. But we're not too fussed about that because we've got a stop loss in place. If it is a trap, we want to be out. Okay, so we are trading below the moving average at this point. So in reality, I'm not going to take any more position. Wait for it to close above, which would be somewhere here. We have to follow the rules. Okay, now that we have closed, at this moment in time, if you really wanted to, you could take another position in the direction here, like that. And where would your stop loss be? So originally when we took this trade, we based it on this candle. Now if we was to take another trade, it would be based on this candle. So that would be something like this, like that. And where would stop loss be? It will be here. And it will be a 2 to 1, something like this. So if you are ever in this situation, how would you manage your risk? Personally, if this goes into profit, I would of course close it at 2 to 1, but this would be near break even. I would just close that trade at break even because we don't really want to have a situation where both of these get stopped out, which might well do in this situation. We're in the London session and you can see that price is okay, and we got stopped out. So you can see clearly that we have got stopped out. So overall, this strategy, you can see that some trades you won, but then you end up getting some losing streaks. So would this be a strategy that I use and try to be consistently profitable and make $350 a day, $500 a day, $1,000 a day? Not really. I wouldn't use a strategy to do that. And those of you guys are watching, if you want to test it out on another pair, feel free to do so. But on gold, this 1 hour strategy with the 5 minute is garbage. Doesn't really work. You might win 1 or maybe 2, but the losers start to add up and you're not really profitable. Thanks for watching, guys. If you're not already subscribed to this channel, then make sure you subscribe, and to support the channel, give it a like, thumbs up, and I'll catch you on the next one.